Alright guys, welcome back. Casual video. Today I want us to look over the earnings that are going to be coming this week, and I'll give you my thoughts and opinions on the different stocks and what I'm actually paying attention to. I feel like this week is going to be crucial for the market, pretty much make or break, right, because of the Fed actually talking on Wednesday. He's pretty much the only one that can reassure the market and stabilize it. Alright, so first company type that I want us to pay attention to are going to be oil and gas stocks. So you have Halliburton, but more importantly, you have companies like Chevron. So the reason why this is going to be so important is that one of the big inflation fears that we have in the market right now is around the energy prices, right? Every time you go to the pump and it's costing you twice as much as last year, that's where you feel like, hey, inflation is completely out of control, right? Especially the people that have less money, that live paycheck to paycheck, they're the ones struggling with this the most. Well, look at how the WTI crude is at $84 right now, and that is quadruple what it was at the low in 2020. So that's why it feels so expensive right now. We are at a 5-year high, higher than in 2019. So what we're going to be paying attention to with Chevron and with the other oil and gas stocks is, are they actually going to be producing more in 2022, or are they just hoarding that cash and giving it back to the shareholders? Because what happens is that when the price of oil and gas actually goes up, it makes more of the projects actually profitable. For example, this is an article from 2017, so I don't know exactly what the prices are, but for the tar sands in Canada, supposedly at that time, $53 a barrel was where they break even, right? So anything above that makes them profitable. Now, when the oil price is at $84, it means that those projects would be very, very profitable. Pretty much every project for oil drilling in the world are profitable at these prices. So what we're going to be paying attention to is Chevron actually going to increase its dividend and its share buyback without really actually producing more, or are they going to invest in more supply in 2022 and help stabilize the prices? If they don't, if all they do is actually do more of the buybacks and dividends, then we can expect that the $84 is going to go higher, probably above 100, and that means that the inflation in 2022 will continue to go up. However, if they actually start to stabilize it, like we saw earlier in 2021, look at the big dip here from $83-ish to $67, that would be very, very good and would put a lot less pressure on the Fed to raise the rates as aggressively. Next stock is IBM, but I don't really have a lot of insight into this one, right? It is more of a legacy tech company. What's going to be a little bit more interesting for me is Logitech here, especially for you guys that are in Corsair or have wanted to get into Corsair. Logitech is basically a one-to-one comparison. So we are going to see how the sales were in the fourth quarter of 2021 and what their projections are for 2022. Like, how much is the consumer demand? What has been the supply chain issues in the fourth quarter? Is it getting better? That's going to provide us a lot of insight. So Logitech is one that I really, really strongly encourage you guys to pay attention to. Next up on Tuesday morning, most of those companies I'm not super interested in, except for American Express, which is going to give us a lot of insight into people's mobility. Are they going on trips? Are they spending, right? So American Express is going to be one of those. It is considered one of the recovery plays. More importantly, though, after hours, you have Microsoft. And Microsoft here is one of the tech stocks that we need to pay close attention to because it has dropped a lot and it is one of the flight to safety stocks. Now, there are some rumors that I've read some articles over the past week that Microsoft Azure, their cloud platform, is losing a little bit of speed. Now, the reason why we want to pay attention to that is that since AMD's profits are mostly coming from their data centers right now, we want to know if the cloud is actually performing well and if their guidance is strong for 2022. If it is, that's the type of information that's going to help AMD. If they expect, hey, we're seeing a lot of slowdowns right now, that is going to hurt stocks like AMD, which are more and more reliant on data centers for their big profits. Overall, Microsoft is a big player, of course, in the NASDAQ. if they can have very strong earnings and also strong guidance, then that could help the stock market stabilize a little bit, right? So the timing is very important, since on Wednesday is when the Fed meeting is going to be. So I don't expect like that the market's going to perform that well on Monday and Tuesday. It's going to be very jittery again. But if those big tech stocks actually give good guidance, and then on Wednesday you also have Powell that calms the market, then you have like positive news that can potentially compound on each other. So on Wednesday, before the open, you have Boeing, which is a very big company, of course, and kind of gives us how the industrials are going to be doing. But most of those companies I don't really care about. Like, it's not the type of companies that I personally invest in. After the close, you have Tesla, and you guys know that Elon has recently said that he expects that there's going to be a recession sometime between like this summer and 2023. What is he seeing, right? And what kind of commentary does Tesla give? The last time they announced their numbers, they were doing fantastic. So what is he actually seeing in the market that we don't know about that could actually create a recession? So we'll have to see. I mean, Elon is always very entertaining. Next up, we have Intel, which basically, just like Microsoft, is going to give us a lot of insight into AMD and how it's doing. Personally, I'm not going to be investing in Intel. I feel like they are too far behind Taiwan semiconductors in manufacturing the chips, right? So even if they're trying to like get back into it, like they want to build a big plant in Ohio, well, it's going to take years and years and years for them to actually be able to catch up to the manufacturing of Taiwan semiconductors. So I know that Intel feels cheap right now, but the fact that AMD is ahead of them, especially with the data center segment, and that's where the big money is, that's why I'm going to follow Intel and what they report, but I'm much more interested in investing in AMD, which I already have a position, as you guys probably know. So Levi is not super important, but it does help us know a little bit what's happening with the consumer, right? Levi's are more designer jeans. Usually they're a little bit more expensive. So if they're doing great, it means that the consumer is willing to spend. And also they have operations around the world. So again, you get a little bit more insight into the supply chain issues. The next one is going to be LendingClub, and you guys know that LendingClub is a very good comparison for Sofi, so I always pay very close attention to LendingClub. Importantly, it is the personal loan category. All right, so LendingClub, for those of you not as familiar, like you can actually put money, right, you know, as an investor to lend to other people, and you want to know, well, not only are they getting a lot of personal loans, but what is the default rate? So that's going to give us a very good indicator of if Sofi's personal loans are going to be like a pretty good number in the fourth quarter, and also what the guidance is for 2022. Are they seeing a slowdown or not? So always use companies like those that are kind of a one-to-one comparison as much as possible. Next up, you have the Las Vegas Sands. This company has most of its operations in Macau, right? So this one is going to give us information on what Wynn is going to be reporting, and to a smaller degree what we can expect from MGM. So again, that's another one that you need to pay attention to, right? If Macau is doing great, it's going to be very good news for Wynn, and if Macau is really struggling, then you can expect that Wynn is going to be crashing and burning even more than it has. Next up, we have Xilinx, which is going to be very important for AMD once again, right? As you can see, there's a lot of insight into AMD we're going to be getting this week. Xilinx is going to tell us, well, how they're actually performing, and also probably what is the status of the AMD and Xilinx merger. So AMD is going to be acquiring Xilinx because it's a very profitable company, which would help AMD, right? We're going to get the status on that. So all we're needing right now is the approval from China, which, as you guys know, it's not exactly like something that I really trust, right? So I'm a little concerned with that. So we might get a little bit more insight into that from Xilinx reporting. On Thursday, we have some more big guns actually reporting. Before the open, we have MasterCard, and this is a great stock in my opinion. So if you're looking for something that's a little bit more stable, that's never going to hurt you that much, in my opinion, and remember, this is not financial advice, right? This is just the way I analyze things. MasterCard is the type of company that is a great addition to like kind of your core portfolio. That's never going to really hurt you. It's not going to 10x or anything, but it's going to continue growing over time. Now, companies like those, just like American Express, is going to give us a lot of insight into the consumer. There's been a lot of rumors that consumer spending has completely crashed since Christmas, right? Well, what better company to actually tell us about that and what they're seeing happening in real time than companies like MasterCard are processing billions and billions of dollars every month and have the most up-to-date information on consumer spending. So that's going to be very, very interesting and important on Thursday. Then you have Nucor that actually produces steel products. The price of steel has actually gone down a lot over the past couple of months, right? So remember like back when everyone was talking about the infrastructure bill, well, the price of steel has skyrocketed. But then no one's talking about that anymore. And look at the price of steel. It's come down tremendously since then. So again, that plays into inflation, right? Inflation is with everything. We saw the price of energy is going up, but look at the price of like basic materials to build things. That has actually come down tremendously over the past couple of months. But no one's actually talking about that, if you guys notice. McDonald's, not super interested. Valero, kind of like Chevron and Co. So after the close, you have Apple, the most valuable company in the world. Well, like, what are they at now? $3 trillion? So Apple, we need to see if they're going to have new products, right, with them. That's one of the big issues is like they've been talking about the Apple car for how long? They've been talking about, or there have been rumors about them partnering with Lucid for many years now. Well, in my opinion, Apple like is a safety stock, but it is overvalued in my opinion, over 30p ratio. Like that historically is very high for Apple. So I really want to see like what the earnings are going to be. This is one that in my opinion could be disappointing and could actually like cause some trouble for the market because they have such a big part of the NASDAQ that when they actually drop, it actually makes the NASDAQ entirely, the index fall. Right? So companies like those, Microsoft, have a very strong weight in the NASDAQ. So that one you will want to pay close attention to. Like, are they going to be beating the numbers, but also what is the guidance? Quick side note, because a lot of the viewers don't realize this, the indexes have a weight for each of the companies. So let's say that the NASDAQ 100, the Apple weight is 12, Microsoft is 10, Amazon is 6, right? Compare that with the bottom companies like Splunk, which is 0.139, or DocuSign 0.171. That means that those two companies, they could actually go up 100% and they would barely move the averages, right? So what matters with the indexes is the top stocks, like especially FANG. So when those companies are struggling, that's when the indexes drop tremendously. Remember, we are investing in companies, right? Companies that have products, revenues, in some cases profits. We're not investing in the index unless you're like more of an ETF investor. So I just want you guys to remember that, like when you see it go up and down every day, not every company is behaving the same way. Companies like Apple can very easily crash the market on Thursday if they report bad numbers. I already touched on the credit card companies, so Visa, just like MasterCard, I feel is a pretty solid stock. However, I want us to finish the video with Robinhood. So this might come as a surprise because you guys might know that I completely despise Robinhood, but it has dropped so much that I'm starting to be a little tempted with Robinhood. I think that their earnings are going to suck, right? But I feel like Robinhood at this point is starting to become a little bit attractive for an acquisition target, right? So either Robinhood acquires other companies or Robinhood is acquired by one of the bigger financial institutions. So I'm starting to look into Robinhood with a little bit more curiosity as a spec play. So just thought I'd let you guys know about this one. I just want to show you guys one last thing. This is the earnings per share for Microsoft. Let's look at the trailing 12 months. Back in 2018, when the market wasn't doing that well, look at how it went from $2, $2.13, $2.43, and then they ended the year pretty well at $4.33. Now, jump to 2021, the latest quarter, $8.94. That means that their earnings per share pretty much doubled in those 3 years, right? Well, look at what happened with the share price. Back in 2018, 2019, it was around 100 to 120. Can we agree on that? Now, in 2022, after the drop, it is at 296. So, the earnings per share actually doubled in those 3 years, and the share price went up about 2.5x. So when people are telling you the market's in a bubble, right, and everything is super speculative, outrageously expensive, I disagree entirely. Is it expensive? Yeah, it's not cheap, but the great companies are just going up with their earnings per share. The valuation hasn't changed that much. So always keep that in mind. We're investing in companies, not in indexes. And I actually think that Microsoft is a pretty decent bet, once again, as a safe pick. So they're supposed to grow another 14% this year. So I'm not going to be investing in it, but keep in mind that the companies aren't doing that bad right now. So the big catalyst this week, of course, is going to be Jerome Powell talking on Wednesday, and he can actually kind of stabilize the market. So there's some talks that they're going to be raising the rates by 50% basis points, by 0.5%, and that would completely collapse the market. I personally don't expect that's going to happen. It would be kind of like going kamikaze trying to fight that inflation. Do you guys think that Jerome Powell and the government want a third market crash in 4 years after 2018, 2020 with the pandemic, and then a new one in 2022? That would be terrible for everyone. And something else that I want you guys to pay attention to that I haven't seen a lot of people talking about. There's the fact that in 2021, right, everyone was laughing when people betting or gambling on GameStop were losing money, when people were betting on SPACs and losing money. The serious investors were like, hee, look at these idiots losing their money. But now in 2022, we're at a different ballgame. Now companies are profitable, and companies that are flight to safety stocks, like the Apples, Amazons, Googles, etc., now they're losing value. And who's taking the big hit now? It is the baby boomers and their 401ks, their retirement accounts. And they have a lot more political power than I do and that you do. They're the ones that control the elections, and they're the ones that are going to be putting a lot more pressure on the government and the Fed to actually stabilize the market. So, can the market collapse and drop another 30-50% in the next coming months? Yeah, everything is possible. But once again, I'm going to continue to be more positive. I'm going to continue to actually invest in the stocks that I believe in the most. And just as usual, I expect a recovery like we've seen in 2018, 2020, 2009, and then 2011. There's always a recovery that happens if you invest in good companies. So don't give up. I'll see you guys in the next